They will take our retirement accounts. They will take our 401ks. They will say, you've all been having such hard times earning money, so what we're going to do is we're going to save you. We're going to give you government bonds, which are guaranteed, 30-year government bonds, and you will get 3%, and you give us your retirement assets.
Imagine walking into a bank today. The banker gives you $3,000 and tells you you don't have to pay him back for 30 years. Would you gladly accept the cash and walk out? Hopefully not, because this story is missing something very important. What's missing from this story is we have no idea what the interest rate the banker is charging us. We also have no idea what the other terms are for the loan. Does this sound familiar to those of you contributing to a 401k plan? This is without a doubt the biggest risk to your 401k. You have no idea what the terms will be when you want to start withdrawing your money. In exchange for deferring income tax today through a 401k contribution, you are paying less tax now and keeping more of your paycheck. This sounds good. However, you still owe the money to the government in the future. Essentially, you are borrowing money from the IRS in hopes that they will treat you fairly when it's time to pay the money back. We don't know what income taxes will be in the future, but I'll bet they'll be a lot higher. The rule where it says you can withdraw the money penalty-free at 59 and a half, they can change that to whatever age they want to as well. For all we know, the government could change the minimum withdrawal age to 70 and the tax rate to 75%. Here's a chart of the income tax rates from 1913 to 2011. This isn't exactly the most stable number you could have come up with to plan your retirement withdrawals. As with most things in life, your biggest risk is the central planners. These sociopaths already have too much control and power over our lives. Ultimately, though, the 401k is a cash cow for Wall Street. During the 1920s boom, just 3% of Americans owned stock. Shortly after World War II in 1952, that number rose to 4%. And by 1980, it was still at just 13% of Americans who owned publicly traded companies. However, after the law for 401ks went into effect on January 1st, 1980, the participation from the American public soared, and so did the fees Wall Street collected. By 1989, public participation in the stock market reached 32%, and by 2006, it peaked at 64%. Wall Street had truly found the perfect cash cow who was willing to buy blindly every single month without question. Talk to anyone who has a 401k, and they won't be able to tell you the fees, the investments they are in, or how much they can expect to have by the time they are in their 60s. At best, they will be able to recall that they checked the box, high risk, high return, or conservative. You know, like holding treasury bonds, which is literally lending money to the most bankrupt institution on planet Earth. Buyer beware. The 401k is a cash cow for Wall Street.
There clearly has been a raid on these funds by the people of Wall Street, and it's cost the savers and the future retirees a lot of money that would otherwise be in their account, independent of the financial collapse.
The fact is that the typical 401k investor is a financial novice. They don't know a stock from a line. And we give them a list of 20 or 30 mutual funds. With half the funds on the list, really dogs, what people would characterize as dogs, shouldn't be on the list to start with.
Now you got a bunch of economic wizards jumping in and taking money out of your retirement plan, and they don't want to tell you how much. You can't decipher it in simple English, and they're not interested in disclosing it or having any transparency about it.
And most of the people that look at their 401ks have no idea that these fees are being taken out.
No. Where would you find it? Where would you find these fees in this prospectus?
There are legal fees, trustee fees, transactional fees, stewardship fees, bookkeeping fees, finder's fees, and the list goes on and on. Miller's committee has heard testimony that they can eat up half the income in some 401k plans over a 30-year span, but he has not been able to stop it.
We tried to just put in some disclosure and transparency in these fees, and we felt the full fury of that financial lobby.
The 401k law was also written to keep your money trapped on Wall Street, only to be invested in a select group of mutual funds. The only way to get it out while you are young is to pay a fee. So you can't use your own savings to invest in a business, rental property, or anything outside of a Wall Street commission. After that, the plan from Wall Street is that if you allow them to manage your money for 3 decades, you should be in the lowest tax bracket when you make your withdrawals. Do you think the stockbrokers and mutual fund managers personally plan on being in the lowest tax bracket when they retire? By giving employers tax credits and deductions for setting up 401ks and even matching contributions, the US government is literally subsidizing the biggest Wall Street banks and investment houses. Currently, there is roughly $3 trillion in 401k plans, with an average all-in cost annual fee of 2.58% according to Fidelity. This equals $77.4 billion for Wall Street every year in just fees. Not to mention the amount of liquidity this provides to the professional traders. The brilliance in this scam is that it has conditioned Americans into believing that the stock market is where retirement and savings belong. Because when you add up IRAs, 401ks, annuities, and other retirement strategies, that number is closer to $20 trillion. Recently, President Obama announced a plan to require businesses to automatically enroll their employees in IRA plans. This is reminiscent of the payroll tax withholding of the 1940s, which would put the government just one step away from being able to confiscate our retirement accounts in the future. Obama is already selling a MIRA, telling Americans it would be an account with good returns and no risk. In October of 2010, the National Seniors Council stated, a recent hearing sponsored by the Treasury and Labor Departments marked the beginning of the Obama administration's efforts to nationalize the nation's pension system and to eliminate private retirement accounts, including IRAs and 401k plans.
They'll do what they think is necessary, and they'll use force, and they'll use intimidation, and they'll use guns, because you can't challenge the state. They're quite capable. The people I know in Washington are saying, well, you got to save the country. You can buy treasury bills from now on. So, no, I think that's very possible.
There are plenty of alternatives to a 401k, starting with your own business, investments, specialized accounts that banks use themselves that are completely outside of the banking sector, cash flowing farmland and rental properties. Gambling your hard-earned wealth in a 401k shouldn't be an option, which is why FutureMoneyTrends.com has put together a special report on the best alternative to a 401k. The report is free. Simply visit FutureMoneyTrends.com/401k to learn more about how you can receive this free report.